Hello students, welcome to BYJU'S IAS. In today's live session, let's discuss one of the very important current affairs topic, that is the concept of e-RUPI digital payment system, which has been announced very recently by the government. Now before I start the discussion, let me start with a situation here. Imagine it's your birthday. Your father as usual forgot your birthday and he forgot to get a gift also. So during the celebration, he will simply hand over a card to you and says, in this particular card, there is a preloaded amount of, let's say, 10,000 rupees. You can go to a particular mall or a shop and purchase whatever you need out of this particular card. Now, this is exactly what the government of India is trying to do, but there are certain important differences. First, in this particular case, I said it was your birthday and your father is giving you a gift. But what government of India is trying to do is not give a gift, but the entitlement to the beneficiaries, to the needed people. Second, in this case, I said your father hands over card to you, but in this particular case, government of India is handing over a digital voucher. Now, there are other differences also, which we'll understand as and when we discuss the concept of a e-RUPI in detail. To understand the concept of e-RUPI, first and foremost, you need to understand the evolution of the welfare transfers that have been taking place in case of Indian economy. Post-independence, all of us will agree that a huge chunk of India's population was living below poverty line. As per various estimates, even during 1970s, more than 50% of the population was within this particular BPL population criteria as such. And to basically eradicate the poverty numbers and to provide certain social welfare measures, government over a period of time, and when I say government, both the central government as well as the states have taken various reforms, have implemented various measures which will try to uplift this particular poor population out of poverty, or in technical terms, we wanted to move them from BPL category into APL category. Now some of these particular reforms, right, both which have been taken at the state as well as central level, for example, in terms of providing wages to the needy people, we implemented Manrega at Panchayat level. In order to provide nutrition, in order to provide food security, we implemented National Food Security Act. We also implemented public distribution system. In order to provide easy access to electricity or affordable access to electricity, many of these particular poor households, even today, are provided access to electricity at a cheaper cost. Right? In this particular way, in every sector possible, both the central government as well as the states have tried to provide entitlement to this particular population, especially targeting this particular population to lift them out of poverty. But despite implementing so many measures, incurring so much of an extra expenditure in the form of subsidies, welfare payments, etc., in every budget year after year, even today a lot of population lives in poverty. And various experts will tell you these particular reforms or measures which have been implemented have not been very effective because of various issues. For example, in many of these particular measures, the right number of beneficiaries or the right beneficiary either has been not considered, or the number of beneficiaries which are covered are not sufficient. In simple terms, omission, commission errors have been done in terms of identifying beneficiaries. There are duplication of beneficiaries in various of these particular measures. There is a lot of corruption in the system. There is a leakage in providing these particular benefits to people, etc., etc., etc. The list will continue. But understand this, yes, despite many of these particular issues, we have been able to reduce the BPL population over a period of time. For example, if you go to the data that has been given by Ministry of Statistics and Program Implementation, in 1970s, around 54% of population actually lived in BPL category. And by 2011, based on the Tandikar Committee report, around 21.9% of the population actually belonged to the BPL category. So yes, over a period of time, these particular measures have been taken. There are issues with these particular measures, but the poverty population has actually come down. But experts basically point out that yes, the poverty numbers have come down, or the ratio of BPL population has actually come down. This has more to do with the economic growth that has been achieved in case of India, especially post 1991. That is LPG reforms, which has dragged or which has pulled up this particular population out of poverty. And it has less to do with these particular reform measures which have been implemented by the government. To address these particular issues or various issues plaguing these particular subsidy measures, government in 2013 introduced the concept of a DBT. Now what is this particular DBT? DBT stands for Direct Benefit Transfer. There are two acronyms that I am using here. One is DBT, Direct Benefit Transfer, and the second one is JAM, Janadan Aadhar Mobile Trinity. And once we understand both of them and what are the issues with both of them, then we can easily understand what is the importance of eRUPI as such. Now let me start with DBT. First and foremost, I have told you this. This was introduced in 2013. Under this, Government of India basically said, we are going to identify the beneficiaries and we are going to connect the welfare payments or the subsidies that we are going to give to them, and we are going to transfer these particular subsidies or welfare payments directly into their bank accounts. And in order to identify these particular beneficiaries, we basically stated that we will have to seed, we will have to link Aadhar numbers of the beneficiaries with these particular the bank accounts of the beneficiaries as such. Now how this has worked? Let me take a very simple example here. I am pretty sure all of you heard of a Pearl scheme, or in English DBTL, Direct Benefit Transfer in LPG. Pearl in Hindi Pratyakshadarshi Hastantarit Labh, and DBTL, Direct Benefit Transfer in LPG. Now generally what used to happen before the DBT was introduced, have a look at this. Imagine here is the consumer, I will use the short form here C. He will basically book a cylinder with the supplier, and this particular supplier, he will supply the cylinder, let's say right at 800 rupees without any subsidy being provided here, and he would be receiving the subsidy from the government. Is it okay? Let's imagine the actual cost of the cylinder is, let's say, 1200 rupees. The government would simply supply the 400 rupees to this particular distributor here, and because government is providing 400 rupees on a cylinder costing 1200, this particular distributor would simply supply this particular cylinder at 800 rupees to the consumer or the beneficiary. But there are certain issues with this particular concept or subsidy measure as such. What are the issues? One, government doesn't know who is the actual beneficiary. Right? What if the same beneficiary or the same household is having multiple connections, that is duplication of the subsidy schemes as such. Right? What if there are duplicate beneficiaries? Right? What if one household has more than one connections? Will Government of India come to know here? There is a problem. Second issue is, what if this particular distributor sells it in the open market, sells it to someone else? For example, have a look at this. In case of India, there are two types of cylinders, LPG cylinders that are available. One is a 14.2 kg cylinder which is used for household purposes, domestic purposes. And the other one is a 19 kg cylinder which is actually used for commercial purposes. So what is a guarantee that this particular distributor will accept the subsidy from the government and supply this particular cylinder to the household itself? He can simply route it to his friend who is running a commercial enterprise, let's say restaurant. So there were issues with respect to this kind of a subsidy scheme. So from 2013, government introduced the concept of a direct benefit transfer, where they stated that no, we are going to revamp this particular whole process as such. Under the new scheme, that is basically DBTL, government said, have a look at this. Here is the customer, he will book a cylinder with the distributor. Now government will not give the subsidy to this particular distributor, rather government will transfer the subsidy into the bank account of the customer. Is it okay? Government will not provide the subsidy to this particular distributor, rather it will transfer the subsidy into the bank account of the customer. That was one of the very important aspects within the concept of a DBT. Bank accounts were required. So government simply transfers 400 rupees into the bank of the customer. The customer will purchase the cylinder from the distributor at 1200 rupees. But effectively, out of the pocket of the customer, only 800 rupees has been given to the distributor. So this was the basic idea of a DBT which was introduced by the government. Now the same model of a DBT was introduced even in PDS also. Even in many other schemes, the concept of a DBT was introduced. As per the latest government information, around 400 plus schemes of the government have been brought under the DBT, and under DBT itself more than 17 lakh crore worth of funds or the welfare expenditure has been incurred by the government. But more importantly, government says because of DBT, we have been able to reduce or minimize the expenditure under these particular schemes by more than 1.7 lakh crore rupees. Now, how the expenditure is actually reduced under DBT? Have a look at this. Now, government knows who is the beneficiary. Is it okay? Government can identify who is the beneficiary. And if there is a household, there are duplicate connections or multiple connections, those particular connections will be removed, right? One household, one connection. And please understand this, any leakage that was possible earlier, right, the deviation that could have been done by this particular distributor, even that particular deviation will be cut off. So because of these particular important points or the outcomes because of the DBT, government has been able to efficiently ensure that the benefits are reaching the beneficiary. Government is able to ensure that there is no duplication of beneficiary, there is no multiple connections in the household, and there are no deviations or diversions of these particular subsidies. Now, under this particular DBT, there are important factors which will facilitate implementation of DBT, drivers of DBT. What are the drivers of DBT? One, there is JAM Trinity. I am going to the next concept now. There is JAM Trinity. What is JAM Trinity? Janadhan Aadhar Mobile Trinity. Second one is new differentiated banks or niche banks which were promoted by RBI in the last couple of years. For example, small finance banks and payment banks. And the third very important driver or facilitator of a DBT is banking correspondents. I am using the short form here. One, they will be referred to as a banking correspondent. Some books will refer to them as business correspondents, and some books will simply refer to them as bank mitras. Do not get confused. All the three are the representing or referring to the same concept itself. Now, within this, right, I'll start with second and third, then I'll detail about the concept of a JAM. Now, what is this SFB and payment banks? RBI, in order to promote the concept of a financial inclusion, another term introduced here. RBI, in order to promote the concept of a financial inclusion and penetration of the financial services or banking services in the rural India, especially targeting rural India, introduced a concept of a small finance bank as well as the payment banks. The objective here for RBI was these types of differentiated banks or niche banks which are asked to do certain specific kind of activities will be able to leverage a technology and ensure that the banking services will reach to the rural regions also. For example, under small finance banks, these are supposed to target smaller businesses, marginal and smaller farmers, and 75% of the credit, 75% of the ANBC for the SFB is supposed to be in the form of a PSL itself. And with respect to banking correspondence, the concept of which was introduced by RBI back in 2006, objective is very simple. The banks cannot set up brick and mortar branches throughout India as such. That is, you cannot expect the banks to set up branches in every village in India, right? For a simple reason, banks are always worried about cost to benefit analysis. That is, if I invest this much amount of money, set up a banking branch, what is my returns? Obviously, banks are worried about it. In case of a rural India, their cost to benefit analysis doesn't work out, right? The cost of operations will be very, very high. The revenue that may be generated by these particular banks could be lower than the expenditure. So, to overcome this and to ensure that despite not having a bank branch, we'll be able to provide banking services, at least basic banking services to the rural population, RBI promoted the concept of a banking correspondent. Under banking correspondent, a representative will be appointed, or a unit or an enterprise will be appointed as a representative of the banks which will perform or which will provide basic banking services to these particular banking customers in the rural India. Now, what do you mean by the basic banking services here? For example, application for opening a bank account, right? Withdrawal of an amount, right? Deposit of a small amount, right? Issue of ATM cards, application for a loan, etc. can be provided by this particular banking correspondents. And as per one of the latest reports, there are more than 2.5 million banking correspondents who are actually working in case of India. Now, to the most important concept, JAM Trinity. Now, before I explain the concept of a jam trinity, earlier I used a technical term, financial inclusion. You will come across this particular term whenever you are discussing the concept of, let's say, role of RBI, right, role of these particular schemes, or even the concept of an inclusive growth. But what do you mean by financial inclusion in the simplest terms? Remember, financial inclusion, you need to remember certain important terms here. What are these terms? Financial inclusion basically refers to providing financial services to the needy people in a cost-effective manner. Three terms. I repeat it. Financial inclusion refers to providing financial services to the needy people in a cost-effective manner. There are multiple examples. Best example for financial inclusion reforms is a concept of banking correspondent, eRUPI, payment banks, small finance bank, of other matter, Atal Pension Yojana, Pradhan Mantri Jan Dhan Yojana, Pradhan Mantri Suraksha Bima Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, etc., etc., etc. All of them are basically promoting the concept of a financial inclusion itself. Now, with this particular understanding, let's enter into the second very important concept of a jam trinity. Now, understand this, the concept of a jam trinity for the first time was proposed in the Economic Survey 14 and 15. But what do you understand by the jam trinity? There are three very important components or ingredients within the jam trinity. Let's start with that, then we will connect it to Jan Dhan, Aadhaar and mobile here. What are the three important ingredients? One, there is a connection between government and beneficiary. There is a connection between government and beneficiary. Second, there is a connection between the government and the banking sector. And third, right, there is a connection between the beneficiary and a bank, that is a customer and a bank. Now, what are the three ingredients that I am referring to? First, government has to identify who is the right beneficiary. Is it okay? Right, for example, government wants to provide cash transfers under PDS. I cannot provide a cash transfer to every citizen of India. I will have to identify who is the right beneficiary under this. Government wants to provide a cylinder subsidy, that is LPG subsidy. Can we give it to every household in India? No, I will have to identify who is the right beneficiary. Although I am using LPG subsidy again and again, you must have read in the newspaper, in the last 1.5 years, Government of India has tried to eliminate or reduce this particular LPG subsidy as such. But anyways, so have a look at this. Government has to identify the beneficiary. Then Government of India has to provide the benefits into the bank account. That is, I have identified a beneficiary. He is supposed to receive, let's say, the cash subsidy in lieu of, let's say, Manrega work that he has done, or LPG subsidy, or under PDS. So, I will basically ask him to open a bank account and I will transfer these particular funds into the bank account of the beneficiary. And the third connection or the third basic ingredient is the connection between the beneficiary as well as the bank. The first connection, will simply use the short form here, or I will use another term here, identification. I will have to identify the consumer, or let's say the beneficiary, identification challenge. Second one is the account challenge, that is the transfer challenge that will be faced by Government of India. And the third one is coverage. How well these particular transfers which have been done by the government, welfare transfers that have been done by the government, are accessible to the beneficiaries. With respect to the first challenge here, Government of India introduced the concept of a Aadhaar. Okay, Government of India is using Aadhaar. And second, in terms of a transfer challenge, Government of India is promoting the concept of Pradhan Mantri Jan Dhan Yojana, PMJDY. And the third one, with respect to connecting between the beneficiary as well as the banking, Government of India is promoting mobile banking. So have a look at this. These three pillars are basically Jan Dhan, Aadhaar and mobile. Hence, this is called as a jam trinity. Now, some more points related to this. Government of India has been promoting opening up of bank accounts post 2014 and 2015 with the introduction of Pradhan Mantri Jan Dhan Yojana. Under this, right, the Government of India has asked both the public sector as well as the private sector banks to ensure that there is at least one bank account in every household in India, and through that they want to push the accessibility to financial services, accessibility to banking services, etc. And this is very important for a simple reason. It had been more than 60 years since independence, and there was more than 60% of India's population which did not have access to banking services as such. There were certain issues with respect to this, right? What are the issues? For example, here is a household. If it doesn't have a bank account, then basically it will not be able to get access to certain institutional credit. And if it is making certain savings, it doesn't know where to invest these particular savings. So in order to basically promote or inculcate the habit of savings and to ensure that there is access to institutional credit, Government of India has promoted the concept of a Pradhana Mantri Jan Dhan Yojana. Right, initially to begin with, these particular accounts were zero balance accounts. Again, there was a criticism with respect to that, saying that lot of these particular accounts are actually having zero balance. But over a period of time, this has actually come down. Right, today more than 1 trillion rupees is actually in the form of these particular deposits which have been mobilized by government or the banking sector through the Pradhana Mantri Jan Dhan Yojana itself. And not only this, using these particular bank accounts, Government of India has pushed even the insurance products into the rural households as such. Second one is Aadhaar. More than 99% of India's population has been issued with respect to Aadhaar identification, and the advantage with respect to this is government will be able to identify the beneficiaries now so that they can target the benefits to this particular population. And more importantly, when you have a centralized system of Aadhaar or central registry of Aadhaar, it is very simple, or it becomes very easier to identify or verify the customers or the beneficiaries. For example, you want to have a KYC basically clearance in a banking sector, they will seek Aadhaar. You want to have a KYC in case of a Paytm account, then they will use Aadhaar. You want to have a KYC in terms of getting a phone connection or a SIM registration, you can use Aadhaar because it is having a central registry as such. And more importantly, now the paperwork that was related to the KYC itself has been reduced to almost nothing. Right? That is the reason Aadhaar becomes very, very important here. Third one, with respect to coverage, that is the mobile connectivity, Government of India is basically promoting mobile banking or other services, right? For example, mobile wallets, which you can use through the concept of a mobile banking itself. So these are the three very important pillars within the JAM Trinity. Now, Government of India's analysis says that first, right, this particular pillar Aadhaar is working very efficiently. More than 99% of the population is issued with Aadhaar. Second one, the Pradhan Mantri Jan Dhan Yojana, right, we have opened crores of bank accounts, more than 40 crore bank accounts within Pradhan Mantri Jan Dhan Yojana, very successful. But the problem started coming here. Problem started right basically with respect to this particular pillar, that is a coverage. Again, I am not saying it is not working, I am simply saying there are concerns with respect to this particular pillar. And the eRUPI will try to basically eliminate this particular concern altogether. Now, what do you mean by this particular concern that I am actually referring to? The third pillar, that is a mobile coverage or mobility as such, the customer or the beneficiary was expected to have a mobile phone and is expected to have, let's say, a smartphone if he wants to use mobile banking. He is expected to have internet connectivity here. Right? Yes, Government of India, or to be more precise, RBI promoted the business correspondent or banking correspondent model even to promote the coverage or the banking accessibility to rural India. But the BC penetration in case of India is on a lower side. There is a need to appoint more and more banking correspondents. Now, when we shift to this particular concept of a eRUPI, you will realize that this particular requirement of internet connectivity, this particular requirement of having a bank account, etc., all of these particular issues will be altogether eliminated. And that is the precise reason why they are saying that eRUPI will basically revolutionize, will basically overthrow how the welfare payments or how the welfare schemes will be implemented in the coming days. And please understand, even before eRUPI, there was one recommendation given by Economic Survey earlier. They basically recommended concept of a BAPU. Right? Remember this particular acronym. Economic Survey recommended the concept of a BAPU. What is BAPU? BAPU stands for Biometrically Authenticated Physical Uptake, wherein there is no need to have a bank account. You need to provide the services, right? For example, you are a Manrega worker, go to appointed personnel, provide your thumbprint or identification details, then the wages will be provided to you, right? In that particular situation, you will authenticate your identification with biometrics, and you will basically physically uptake whatever entitlement you have. But eRUPI is not the concept of a BAPU, but nevertheless remember the recommendation of Economic Survey in the form of BAPU. Now, with these particular caveats, let me enter into the main point of discussion for the day, that is the concept of a eRUPI. Now, before I start, this is the actual representation of a eRUPI. Please do not confuse eRUPI with CBDR, which will differentiate later. Neither is it a cryptocurrency. Please do not mistake it for both of them or either of them. Right? What are the differences? We'll have a look at it later. But in simple terms, what do you mean by eRUPI here? Please understand this. Government of India's document simply says eRUPI is a cashless, contactless, person specific and purpose specific. Okay, it is cashless, contactless, person specific and purpose specific digital voucher. Is it okay? I'll repeat the definition. This is important. It is cashless, contactless, person specific and purpose specific digital voucher. Right? In simple terms, if Government of India needs to provide any entitlement to you, rather than transferring the funds into your bank account or providing in kind the subsidy, government henceforth is thinking of basically transferring a digital voucher into your mobile phone. Now, in this particular case, some of you will start thinking, sir, digital voucher means again I need to have a smartphone. Government says, please do not worry. These particular vouchers that we are referring to, digital vouchers that we are referring to, it will be either in the form of a SMS, short message services, or it will be in the form of a QR code. If you have a smartphone, you can receive the QR code, or if you do not have a smartphone, you can simply receive this particular digital voucher in the form of a SMS. This is a basic idea for eRUPI, cashless, contactless, person specific and purpose specific digital voucher. Now, what are the importance of each of the terms here? One, cashless. Government will not give you cash now, rather whatever entitlement is there, you can simply get access to this particular entitlement. How this will work out? Give me a minute, I'll explain that also. Contactless, the service provider, that is, let's say you are supposed to get a certain entitlement from the health ministry in the form of, let's say, access to nutrition. You don't have to have a contact with the person here, right? There is no need to have a contact, right? And the meaning of the term contactless here is where there is a service sponsor and a service provider, you do not have to have a contact with either of them, right? Please understand, under eRUPI there are four participants. In eRUPI there will be four participants. Who are them? One, as usual, beneficiary. You'll have to remember this. Second one is a sponsor, beneficiary sponsor. Third one is a service provider. And the fourth one is a bank. This particular bank could be a private sector bank or a public sector bank. Okay. So, one is a beneficiary, sponsor, right, that again the sponsor could be private sector or government entity itself. Third one is a service provider. Fourth one is a bank. Right. For example, let me start with this only. You are supposed to get certain entitlement from the health ministry. Here the sponsor would be health ministry. And the access to, let's say, nutrition, access to medicine from whichever shop you are supposed to get, he will be referred as a service provider. You are a beneficiary, and right, the bank will connect all of you, right? How it is going to connect? Give me a minute. So have a look at this. When I say contactless, you as a beneficiary, you don't have to be contacted or in contact with the sponsor or the service provider. I'll explain that later. Person specific, the entitlement will be issued to the right beneficiary. It will be sent to the mobile phone of the right beneficiary or the correct beneficiary. And purpose specific, in this particular case, you are supposed to get a medicine. The entitlement or the QR code or the SMS will be sent to you, and you can basically avail the medicines only using this particular SMS or the QR code. That is the reason these are referred to as a cashless, contactless, person specific and purpose specific digital services or digital vouchers. Now, as of now, e-RUPI would be used by the government in providing benefits under various schemes such as drugs and nutritional support, TB eradication programs, drugs and diagnostics under schemes such as Ayushman Bharat, Pradhan Mantri Jan Arogya Yojana, and it could be extended even into fertilizer subsidies also. Now the question is, how will this particular e-RUPI actually work? Let me start the process here. Follow this very carefully. Here is the service sponsor. Okay, here is the service sponsor. Again I am saying, as per the government document, the sponsor could be the government entity, or let's say the government, or it could be even the private sector company also. The sponsor will basically approach the bank, with the details of who is the beneficiary, what kind of a benefit they want to provide, how much is the value of the benefit, and what is the mobile phone number of the beneficiary. That is very, very important. So with all of these particular details, they will approach a bank, deposit the money. Now the bank will basically send this particular QR code or SMS to this particular beneficiary. Is it okay? They will send this particular QR code or SMS to the beneficiary, and this particular beneficiary will approach the service provider, and provide the verification code. Is it okay? How do we identify he is the right beneficiary? They will provide the verification code. As per various documents, this particular verification code will be a combination of alphabets as well as the numbers as such. So this particular beneficiary will approach the service provider, provide the QR code or this particular SMS, string of SMS, and he will be able to avail these particular services. For example, nutrition supply, medicines, or any diagnostics, etc. Now, once this particular service provider has provided the services, he will be able to use this particular voucher, approach the bank and get back the money for the service that he has provided. Is it okay? I will explain the stream once again. Follow this very carefully. Here is the sponsor, right? Again, government or private sector. They will approach a bank with the details of the beneficiary. What is the scheme under which they are transferring the benefits? What is the value that has to be transferred to each of the beneficiary, and the mobile number of the beneficiary. And this bank will basically send this particular QR code or the SMS string to this particular beneficiary. And once it has been sent to this particular beneficiary, they will approach the service provider, provide the verification code, and please remember, this particular beneficiary need not have to provide any identification details here. Please make a note of this. No requirement of submitting any details or any ID card, nothing has to be provided. All he needs to do is have the mobile phone, either provide the QR code or provide this particular verification code if there is a string of SMS. And the service provider will basically ensure that this particular beneficiary will get access to services, and once the service delivery is completed, this particular service provider will approach the bank and basically get the amount for the service that he has provided. In simple terms, the idea of e-RUPI is nothing but a concept of a prepaid digital voucher. Remember this particular term also. Prepaid digital voucher means what? The service for which the service provider is going to incur certain expenditure, that amount is already deposited in this particular bank. Now once the service delivery is completed, he can get access to this particular amount. And this is the basic structure, or this is a basic mechanism how this particular e-RUPI is going to work. Now what are the advantages here, right? Why this particular system is said to be revolutionizing the whole idea of welfare payments in India? First and foremost, this is a most important point, beneficiary. The beneficiary in this particular cycle that we have explained just now is not required to have a bank account. Is it okay? He is not required to have a bank account, and that is already a much better version or much better scheme compared to, let's say, a DBT or a JAM Trinity as such. Second, this particular beneficiary need not have an internet connection also. That is also very, very important here, because most of the times the argument here is, yes, Government of India wants to promote the objective of a digital economy or digital transactions, but to avail or utilize these particular concept of a digital transactions, internet connection is actually required. But in this particular case, not required. Even if it is a small phone or a normal phone without having any smartphone features as such, you can receive a string of SMS, use it to get access to the services, right? So, and the third one, identification or the privacy of the beneficiary is also protected here. He doesn't have to provide any identification details. And much more importantly, understand this, earlier, yes, we have been able to implement various schemes, various measures. Apart from the issues such as corruption, right, the pilferage, that is basically the deviation, etc., that used to happen. One other issue with respect to getting access to these particular subsidies or welfare schemes was the entry barriers. Now, what do you mean by entry barriers here? Imagine you are supposed to get a certain access to services. There is a problem with respect to providing all the documentation to the respective authority which was actually implementing this particular scheme. And we are talking about the rural population, right? In case of a rural population, the identification documents, or let's say the local address documents, introduction signature, etc., basically worked as a hurdle for getting access to these particular services. Or it was as if we were harassing these particular beneficiaries to get access to their entitlement. And that also prohibited some of the population to get access to these particular welfare measures of the government as such. Now, in terms of corruption, I am reminded of one of the famous statements of one of the former Prime Minister of India, Mr. Rajiv Gandhi. In one of the interviews, he basically stated that when the government of India provides, let's say, 1 rupee for welfare of the poor person, by the time it actually reaches the poor person, because of various leakages here and there, it is actually 15 paisa, right? It is the only 15 paisa which is actually received by the beneficiary. So that was the state of the welfare schemes which was implemented in case of India as such. So this is basically the system how it is going to be implemented. Now, what are the banks that are live with e-RUPI right now, right? So these are the set of the banks. Just in case a question is asked in the prelims, please remember names of these particular banks as such. Again, private sector banks can utilize this, and even public sector banks are live in this particular platform, okay? And most importantly, this particular e-RUPI has been designed, it has basically been built up by NPCI, National Payment Corporation of India. In addition to NPCI, there is a Department of Financial Services, DFS, there is a Ministry of Health and Family Welfare, and there is also National Health Mission. These are the 4 entities that are involved in designing this particular e-RUPI. And within this particular NPCI, it already has a design of UPI. It has a system called as UPI, Unified Payments Interface. And this particular e-RUPI will be riding on this particular concept of a UPI itself. So please be aware of all of these particular technical terms that could be asked either in the prelims or in the mains. So this is how e-RUPI will work. Now, how this is going to revolutionize the welfare payments, right? How these particular schemes or the welfare programs of the government of India will be revolutionized because of this particular e-RUPI as such. I have given certain very important points here. Let's have a look at each of them. One, this is contactless. We have already established this. This is a cashless, purpose and person specific. Right? Done. We have addressed all of these particular terms. Second one, the beneficiary, most importantly, doesn't need to have a bank account. Altogether, the requirement of a bank account will be eliminated. Third one, ensure the money is used for the right purpose. Right? Understand this. Why Government of India is stressing on this particular point? With introduction of a e-RUPI, now we can ensure that whoever is the right beneficiary, we will identify him or her. Whatever is the right amount of a benefit we are supposed to provide to them, right, we are going to ensure that that benefit will reach to these particular beneficiaries. And that is the reason, right, this will basically ensure that there are no leakages in the system, corruption will be weeded out, number of hierarchies, that is how many officials are present in the system which will delay the process of implementation of welfare programs, that will also be eliminated, right. So that is the reason this is very important. Fourth one, service provider is paid only after providing the services. Is it okay? Service provider will be, right, government will ensure that the service provider will get the payment based on the service that is provided only after the service delivery is done. And not just this, follow this, this is also very important. Earlier, if you are a service provider, you will provide the service, then keep on running behind the government officials, right, for distribution or for release of the funds as such. Now, Government of India says that also need not happen, because if you remember the earlier slide, the money is already there in the bank, right? Provide the services, take the voucher, approach the bank for the service that you have provided, the bank will make the payment to you. That is the reason I used the term, it is like a prepaid voucher as such. Next, privacy of the beneficiary is protected. The beneficiary, when he is going to get the access to the service, or let's say the goods or services for that matter, he doesn't have to disclose his personal identification details. That is absolutely not required, at least as of now. Next, the voucher redemption can be tracked by the issuer. That is also very, very important. Government has ensured that the vouchers have been issued. Vouchers have been issued by the banking sector to the beneficiary. Now, what is the status of the voucher, right? Are the people using these particular vouchers? Have they been submitted to the service provider? If yes, how many have reached the service provider, etc., etc., etc. All of these can be tracked by the sponsor of this particular voucher as such, and that is also very important. Done. Voucher has a verification code that will basically ensure that these particular vouchers are safe and secure. Right, if someone, if there is an issue of someone misusing it, so on and so forth, government says, please do not worry. There is, a verification code for this. Right, only the beneficiary will get access to the verification code, which he can use or provide it to the service provider to get access to the services. Can be used by the private sector also. Right, the Prime Minister, when he was about to launch this particular initiative of eRUPI, in the speech he stated that it's not just that this is open only for the government entities, even the private sector entities can actually use this. And please understand this, yes, the private sector, for example, if they have to provide certain welfare payments to their, let's say, the employees as such, if they are supposed to pay certain, let's say, bonus or incentives, can utilize these kinds of e-vouchers or the eRUPI as such. And one more very important point, since we are discussing the accessibility to this for the private sector, please understand this. India is not the only country which has introduced the concept of a vouchers as such. Right? There are many countries around the world which have actually utilized these particular e-vouchers or digital vouchers, and they have worked very efficiently in these particular countries. For example, in case of USA, right? In case of USA, there is a housing rent voucher system, right? Very, very famous. There is also a voucher system for education system also, which has worked very efficiently in case of USA. So, apart from India, there are many other countries around the world which have already utilized the concept of a voucher system as such, and they have worked very efficiently. Next one, will promote financial inclusion, move towards a digital economy. Right, when Government of India implemented, if you go back, let's say 5 to 6 years ago, Government of India implemented the concept of a demonetization. And one of the objectives of the Government of India was, we wanted to move towards the cashless economy or less cash economy and towards the concept of a digital economy. That is basically, under the digital economy, usage of a cash will be very, very less, right? More and more digital transactions will be promoted. But one of the hindrances for achieving a digital economy or movement towards the digital economy was accessibility to the bank accounts, accessibility to digital banking systems as such. And with eRUPI, you don't have to be worried about it. The need for bank accounts would be reduced and digital transactions would be promoted through the concept of a eRUPI itself. In addition to this, government also stated that if the private sector wants to do something with respect to CSR funds or CSR activities, they can perfectly use these particular e-vouchers itself. For example, if there is a particular company, right, which wants to use the funds within the CSR, and they want to provide education for certain children as such, then basically they can approach a bank, right, deposit the money that is equivalent to the fees of these particular children. The vouchers, that is eRUPI vouchers, will be sent to these particular children or the mobile phones of their parents, and their parents can submit it to the school, which will accept it in lieu or instead of the fees, and will later get it from the banking sector as such. So, even in case of the CSR funds, the private sector can perfectly use the concept of a eRUPI itself, right. So, this is the discussion with respect to utility or the benefits that we want to derive out of the concept of a eRUPI. Next, I said that it is neither CBDR nor a cryptocurrency. Please do not confuse between all the three concepts. With respect to the difference between, let's say, e-voucher such as a eRUPI and the concept of a CBDR, what are the basic differences? Understand this. CBDR is a digital currency. Last week in the economic classes we have discussed this. CBDR, central bank, these particular currencies, digital currencies are basically the digital currency, virtual currencies. It is money itself in the form of a digital form or digital state. Whereas in case of eRUPI, no, this is not a money. This is not a money, this is a voucher which has its value based on the underlying asset. What is the underlying asset? The subsidy or the amount of a money that has been allocated by a particular ministry for this. For example, one ministry gives 1000 crore rupees to a bank, right? This is the underlying asset, and based on this underlying asset, the bank will issue these particular vouchers to the identified beneficiaries, the list of which is provided by the respective ministry. So CBDR is actually currency, but eRUPI is a voucher. It's simply a digital version of a voucher or a physical voucher as such, which is prepaid in the form. In terms of CBDR, we can transfer it from one person to another person. If I start owning CBDR and I can simply transfer it to you, but in case of e-voucher or this eRUPI, government says no, these are person specific. These are person specific. And the third very important difference, CBDR, again, if it is implemented this way, can be used to purchase any kind of a transaction or can be used for purchasing any kind of a goods or services in the market, assuming it is implemented that way. Whereas in case of the eRUPI, again government says no, this is purpose specific. For what purpose this has been issued, you can use it only for that particular purpose only. You cannot use it for any other purpose. For example, it has been issued for you to purchase LPG cylinder. You can use it only for purchasing LPG cylinder. Getting access to medicines, you can use it only to purchase medicines. Getting access to, let's say, food grains, you can use it only for purchasing of the food grains. You cannot cross utilize it to get any other service in the market. These are the important differences between the concept of a digital voucher, that is a prepaid instrument such as a concept of a eRUPI and concept of a CBDR. Now, what is the difference between eRUPI and a cryptocurrency? Again, cryptocurrencies are privately owned currencies. These are owned by the private people or private entities, whereas in case of eRUPI, these are regulated by the government. Is it okay? These are regulated by the government. Cryptocurrencies such as Bitcoin can be traded, can be mined out, in the system. But in case of a eRUPI, no, you cannot mine them out, These are not tradable. At least that is what government says. Person specific. If it is issued to you, only you are supposed to utilize it. And the concept of a cryptocurrency such as, let's say, Bitcoin uses a blockchain technology, but government of India as of now said, no, we are not going to use the idea of a blockchain technology in case of a eRUPI as such. So these are the important differences between eRUPI, CBDR on one side, eRUPI and cryptocurrency on the other side. So what have we seen so far? What do you mean by the concept of a DBT? What is a jam trinity? Then we have basically discussed what is eRUPI, where we are implementing eRUPI, how eRUPI is actually going to function, what are the advantages or benefits that we want to derive out of eRUPI, and the difference between eRUPI, CBDR, eRUPI and a cryptocurrency. And finally, let's move into the concerns, Are there any concerns related to a system of eRUPI as such? Definitely yes, there will be certain concerns. And please be worried about this for a simple reason. Most of the articles that have gone through are basically discussing how revolutionary eRUPI is actually. Yes, no doubt, it is a revolutionary reform or a measure taken by the government, which is going to overhaul or basically change the whole system of how welfare payments or welfare schemes are actually implemented in case of India. But are there any concerns? If at all a question is asked in terms of a critical evaluation of a eRUPI, you are expected to write the concerns also. So what are the concerns? One, ensuring the right beneficiary is a problem. Okay, ensuring the right beneficiary. What do you mean by this? Government says yes, it is a person specific. That is, if my mobile number is given and I am supposed to get certain entitlement, the QR code or SMS string will be sent to me. Correct. But what if I started selling this particular QR code to my friend and I will take money from him? Is it okay? And my friend will basically take the QR code or SMS string, go to the service provider, and because the system has been built such a way right now that the beneficiary doesn't have to provide any identification details, my friend will get the entitlement. So don't you think the objective of Government of India to make eRUPI as a person specific is already defeated? Definitely yes. So how do you ensure that the entitlement that we are going to provide is the right beneficiary, he is the right beneficiary, she is the right beneficiary? How do you ensure that? Right, that has to be taken care into account. First problem. Second, quality of a service. Second and third concern will deal with the supply side itself. Now what do you mean by here? Right, have a look at this particular system here. Imagine a particular private sector company, in order to fulfill its CSR activities, will use some of these particular funds within CSR funds and right, ensure that these particular vouchers, digital vouchers, are given to certain identified beneficiaries, right, in terms of let's say getting access to food grains, in terms of getting access to hospital services or the COVID vaccination as such. But understand this, by ensuring that they are going to get the digital vouchers, we are only ensuring that they will have money to pay or access to services. That's it. Is it okay? We are basically giving them the right to go to a service center and get the access. But what if once this particular beneficiary approaches a hospital, medicines are not available, or he needs to get a medical checkup, right doctor is not available, and we have seen this, right, because COVID has basically exposed the healthcare, right, the issue of healthcare in case of India. What if the right medicines are not available? What if in the vicinity there is no hospital for him? Right, so ensure that or understand this, the concept of eRUPI will basically ensure that the beneficiary has the QR code, right? It basically ensures that the voucher is available with the beneficiary, but it doesn't guarantee the quality of the services which will be provided to the beneficiary, one, and second, understand it is simply a voucher which is taking care of the demand side in the market. That is, the beneficiary has the voucher, that's it, but it doesn't guarantee that the healthcare facility will be available. It doesn't guarantee that right amount of food grains will be available in the vicinity. It doesn't guarantee that vaccines will be available in the vicinity as such. Right, so these are some of the concerns which have been raised by various experts as of now. As the time passes by, right, as and when this particular concept of eRUPI is implemented across many sectors, we will continuously see that there are certain issues here and there with respect to implementation of the eRUPI system as such. So this is in totality about the discussion of a eRUPI or digital service system which has been announced by the government very recently. Now based on this, what kind of questions can be asked in UPSC? In prelims, you can expect questions on eRUPI itself. You can expect questions on UPI, which is a part of a eRUPI. You can expect questions on JAM Trinity as well as DBT. Right? This is the scope of this particular topic in terms of prelims. In terms of mains, what kind of questions can be asked? A simple straightforward question could be put in this particular way: how the eRUPI system of welfare schemes or supplying welfare schemes is going to revolutionize the expenditure incurred by the government of India, right? Evaluate, discuss, or else another kind of a question, yes, right, this particular eRUPI is a very important reform, but it is not a panacea for all the ills in the welfare schemes, discuss. Right, so there are types of questions which can be framed, or another type of question, how this particular eRUPI is a much better scheme or a program of central government compared to DBT and JAM, right? Elaborate. These kind of questions can be asked in the UPSC mains. Please be very careful, and if you have followed the lecture that we have discussed so far, right, we have covered all of these particular concepts one by one. So that's it from my side. Thanks for listening to this particular live lecture. At the end, I can only say that if you like the initiative, please hit the like button and provide your valuable inputs in the comment section below. And if you have not yet subscribed to our channel, please subscribe to our channel. Thank you. Have a good day.